There's this wild story going around that Saudi Arabia has ended a 50-year deal with the US, where Saudi agreed to sell all its oil in dollars. Some say Saudis have ditched the dollar, and this is a sign of the dollar's downfall. Except, there was no such deal. In this video, we will explore what was the agreement and what is actually going on with all the headlines. Before we start, if you are new here, please subscribe to our channel and turn on the notifications so you never miss an update. Now, what is really going on? So, Saudi Arabia isn't ditching the US dollar for oil sales, and there's no mysterious Petrodollar pact. Actually, there's no Petrodollar pact at all, secret or not, so there's nothing to renew or drop. And no, global finance isn't about to flip on its head. Here's the plain truth behind this mountain of confusion. Back in the 1970s, the US and Saudi Arabia teamed up to create a joint bilateral commission on economic cooperation. The goal was to tighten US-Saudi relations after the 1973-74 oil embargo sent prices skyrocketing and inflation soaring. The US wanted to avoid another crisis, so they encouraged the Saudis to invest their oil profits in the US by buying US assets. This wasn't a wild idea. The Saudis were already doing it. The plan was to keep it going strong. Through this commission, the US promised technical assistance in areas like defense, agriculture, labor, science, technology, and industrialization, all funded by the Saudis using petrodollars, the dollars from their oil sales. Not a formal deal or treaty. But let's be clear, this wasn't a formal deal or treaty. The US got closer to a key player in preventing another oil shock, and the Saudis got two major benefits. The first benefit was development help from the US. The second benefit was assets in USD, a currency they could easily move around. Fast forward to today, and the irony behind the rumors is that the US and Saudi Arabia are about to sign a historic security deal, bringing them even closer in terms of defense. Despite what some might say, the relationship between these two countries is not unraveling, but rather strengthening. Plus, the entire global oil trading system, from financing and transportation to insurance, still operates in USD. This system is deeply entrenched, and changing it would be like trying to reverse a river. The network effects and the existing infrastructure are just too strong to make any sudden shifts. Another point worth noting is that the US has become the largest oil producer in the world. This means that the biggest source of petrodollars now comes from the US itself. This is quite a twist in the story, given the historical context where Middle Eastern countries, especially Saudi Arabia, were the major suppliers of oil. Now the US has taken that spot, further entrenching the dollar's role in global oil transactions. Like all effective fake news stories, the rumors about the US and Saudi Arabia have a sliver of truth. For instance, Saudi Arabia has indeed joined mBridge, a cross-border central bank digital currency project involving the central banks of China, Hong Kong, Thailand, and the UAE. This project aims to streamline and speed up international transactions. However, mBridge does not plan to support dollar payments for now. This has fueled speculation about a shift away from the USD, but the reality is far more nuanced. The reality versus speculation. So, the stories about a massive shift away from the USD are largely exaggerated, grounded in partial truths, but missing the bigger picture. For Saudi Arabia, there's another factor at play. Its currency, the Saudi riyal, is pegged to the dollar. This peg provides economic stability, giving Saudi Arabia a strong incentive to stick with the US dollar. The fake news article suggests that Saudi Arabia might suddenly start pricing its oil in renminbi instead of dollars. However, Saudi Arabia has always had the freedom to price its oil in other currencies. The reality is more nuanced, with economic stability and existing trade relationships playing key roles. However, there's no denying that there's increasing pressure on Saudi Arabia to use alternative currencies. Nowadays, China is a far more significant oil customer for Saudi Arabia than the United States. Following Russia's invasion of Ukraine, Russia has started pricing much of its oil sales to China in renminbi. China has been boasting about record international trade volumes using the renminbi versus the dollar. Although much of this increase is tied to the fallout from the Ukraine war, some Chinese oil buyers are now balking at high Saudi oil prices compared to Russian oil. China clearly has greater ambitions for its currency. The internationalization of the renminbi is a frequently mentioned strategy. Even Swift data shows that the renminbi's share of international payments has more than doubled over the past 5 years, growing from 2.15% to around 4.5%. China views the expanded BRICS trade grouping as a tool to further promote the renminbi. While it's true that the landscape of international finance is slowly evolving, with currencies like the renminbi gaining ground, the USD's entrenched position means it will continue to play a central role in global transactions. What if the Saudis don't sell oil in USD? Back in the 1970s, the Saudis didn't have many choices when it came to selling oil. It was pretty much the dollar or nothing. But now things are different. The Saudis could diversify and start selling oil to the Chinese in yuan and to the Indians in rupees. But what do they do with all that yuan and rupees once they've got it? Ideally, they'd buy Chinese or Indian assets like government bonds, stocks, or real estate. Sure, that might work, to a point. But let's be real, replacing the dollar isn't a walk in the park. First off, US assets are a lot more attractive from an investment perspective, especially compared to Chinese assets. Plus, Chinese and Indian assets aren't as liquid as US assets. Good luck trying to find enough treasury bill equivalents to park cash in, like the Saudis, or even you and I can do with US treasuries. And then there's the whole convertibility issue. The dollar is as easy to buy and sell as candy at a fair, with hardly any restrictions. The Japanese yen, euro, and pound also enjoy this luxury, but the yuan and rupee, not so much. China and India have strict capital controls, which makes their currencies a pain to convert. China and India are not about to loosen these controls anytime soon. China, in particular, would see a mass exodus of capital if they did, with everyone rushing to park their money in safer places like the US. So what's more likely? If the Saudis receive yuan or rupees for their oil, they're probably going to exchange it for USD as soon as possible, assuming they can find takers for all that yuan and rupees, which in fact might be harder than finding a needle in a haystack. And guess what? We're back to square one. Here's why the dollar will likely remain dominant. The USD is unlikely to be dethroned from its top status anytime soon, maybe not even in our lifetime. Here's why. The USA dominates global trade. First, global trade is dominated by the US, China, and the EU. The US imports much more than it exports, making it a major player in global trade. China is the dominant exporter, and even Europe exports more than it imports. This means the rest of the world is flooded with US dollars, received in exchange for goods supplied to Americans. Their economies rely on this dynamic. Dollar is a trusted currency. Second, the world trusts the US, and by extension, the dollar. The US has the deepest and most liquid financial markets, thanks to its massive economy, open trade and capital flows, strong rule of law, property rights, and a history of enforcement. Even though the US makes up about 25% of the global economy, around 60% of global foreign currency reserves are in USD. This share has fallen from 71% in 2000, but remains far ahead of other currencies. Dollar dominates international finance. Third, the USD is dominant in trade invoicing and international finance. Outside of Europe, more than 70% of exports are invoiced in US dollars. That's unlikely to change anytime soon. Everyone wants USD because it's liquid and safe. This also makes the USD the dominant currency for international banking. Close to 60% of international foreign currency banking claims are in USD, including bank deposits denominated in foreign currency and loans taken out in a foreign currency. This figure has been fairly stable since 2000 and has actually increased over the past decade. Could things change? Sure, but it's likely to be a long and very slow process. Ignore the viral news stories that pop up every few months claiming some trivial event will crash the dollar. The global economy is a complex system in which the dollar is deeply embedded, so it seems like the dollar isn't going anywhere soon, and that's a wrap. Affluence? What do you think? Will the dollar crash or continue to be an important part of the financial system? Share your thoughts in the comments below. If you enjoyed the video, don't forget to give it a like and share it with your friends. Subscribe to our channel and press the bell icon for future updates. See you in the next video.